Hey everyone, welcome back to Corporate Decoder. Today, Tetra Tech Inc. Tech just filed its quarterly report for the period ending the 28th of June 2026, and I am seeing a mixed bag of results that paints an interesting picture. Quick note, this is not financial advice, just my take on public filings for educational purposes. While revenue is down slightly, the company's international business is booming, and its core operations remain strong, despite some headwinds. Let's dive straight into the numbers. Tetra Tech reported revenue of $1.3 billion for the 3 months ending the 28th of June 2026. That is a slight dip from the $1.37 billion they reported in the same period last year. Looking at their balance sheet as of the 28th of June 2026, their total assets stand at a hefty $4.39 billion. Their cash and cash equivalents are sitting at a solid $230 million, which is a nice increase from the $167 million they had at the end of September 2025. This shows they are generating good cash flow. Now let's talk about the income statement for the 9 months, ending the 28th of June 2026. Revenue came in at $3.74 billion. This is down from $4.11 billion in the prior year. The main reason for this drop is a significant decrease in revenue from US federal government contracts, which fell by over 32%. This was largely due to major cuts in United States Agency for International Development programs after a presidential executive order. Imagine losing more than a third of your business in one sector. That is a big hit. However, it is not all bad news. Their international revenue is actually up by nearly 10% for the 9-month period. This shows that even though their US federal business is facing challenges, their global operations are growing strong. When we look at revenue net of subcontractor costs, which is a good way to see the core business performance, Tetra Tech is showing resilience. For the 9-month period, this figure is down just 7.5%. This means they are managing their costs well even as revenue dips. Their gross profit for the 9 months was $677 million, which is a slight decrease from $687 million last year. Their selling, general and administrative expenses also remained pretty stable at around $255 million for the 9-month period in both years. Now this is where things get really interesting. Income from operations for the 9 months ending the 28th of June 2026 jumped to $430 million. That is a huge increase of almost 90% compared to the $227 million from the previous year. This surge is largely due to time factors like a $115 million legal contingency charge last year, and a $92 million goodwill impairment charge also from last year. When you strip away these big one-time events, their adjusted income from operations is actually down slightly by about 2%. Last year, the company took a big hit with a $115 million charge for legal contingencies related to environmental remediation work at the Hunters Point Naval Shipyard. This year, they avoided that kind of major one-time expense. They also didn't have a goodwill impairment charge this year. Last year, they had to write down $92 million of goodwill, which means they overpaid for an acquisition, or that acquisition did not perform as expected. This year is cleaner from that perspective. This all leads to net income. For the 9 months ending the 28th of June 2026, net income attributable to Tetra Tech was $308 million. This is a massive jump from $120 million last year. Again, much of this is due to the absence of those big one-time charges from the prior year. Diluted earnings per share on a reported basis show an even more dramatic increase from 45 cents last year to $1.18 this year. But on an adjusted basis, excluding those one-time items, their earnings per share is actually flat year over year. Let's break this down by segment. The Government Services Group, also known as GSG, saw its revenue drop by over 23% for the 9 months. This is mainly because of that significant reduction in US federal government contracts, especially those related to international development. On the flip side, the Commercial International Group, or CIG segment, is showing strong growth. Revenue here increased by over 7% for the 9 months and even more in the 3rd quarter. This growth is fueled by increased activity in water utilities and digital water projects, especially in the United Kingdom. They also benefited from acquisitions made in 2025. Looking ahead, their backlog, which represents contracted work yet to be performed, stands at a very healthy $4.5 billion. This provides a good indication of future revenue. The Government Services Group has $2.1 billion of backlog, while the Commercial International Group has $2.4 billion. On the cash flow front, Tetra Tech generated $466 million in cash from operations for the first 9 months of 2026. This is a significant increase from $356 million last year. This improvement is partly due to cash collections from disaster response activities, and also because they didn't have those big legal contingency payments payments like they did last year. Investing activities show they spent $191 million on acquisitions in the first 9 months of 2026. This includes companies like Halvik Corp and Providence Consulting Group. They also sold off their Norway operations for about $40 million. In financing activities, they continued their stock buyback program, spending about $200 million in both the 2026 and 2025 periods. They also paid out dividends. Their long-term debt is around $801 million. They also have convertible notes worth $575 million. The interest expense on this debt has actually decreased slightly, which is a positive sign. It is important to note that the company recently refinanced its credit facilities in May 2025. They have a $1.5 billion credit facility with a good amount of borrowing capacity available. They seem to be in good shape financially with strong compliance on their debt covenants. So what is the story here? Tetra Tech is navigating.